What's going on, everybody? It's Jeff here. Welcome back to the channel. That was a Friday we haven't seen in quite some time. The entire market pulling after Jerome Powell speaks for a very short time frame, just 8 minutes. AMC and APE also being pulled down with it. I'm going to cover everything you need to know, guys. So let's get right into it. First off, take a look at the market. A little bit of algorithms popping in, at that 10 o'clock time frame as soon as Jerome Powell took the stage. Now, they allotted 30 minutes for him to talk, and it was just 8 minutes for him to completely shake up the entire market. If you zoom out a little bit and take a look at this daily pattern on the SPY, I'm going to zoom in a little bit for you here. You can see once we bounced off that 200-day moving average, a little bit of choppiness and this massive red candle. We also haven't seen this kind of volume in quite some time. When we zoom out just a little bit further to the weekly time frame, we bounced off that 50 weekly moving average, almost bounced off that 50 weekly moving average. But if you watch the video I made last week right here stating, take a look at this candle. This is a very bearish candle. We had a little bit of choppiness, looked like we were going to come try to, fill the gap back up to that 421 area. Jerome Powell started speaking and completely took the market down. Now let's go over just briefly what he said. So the stock market and investors really started to test Jerome Powell because he was very dovish. He didn't want to shake things up too much after his plan to start raising interest rates. And over the past few months, he's just been very soft. Okay, and he never really gave any direction. When he would speak, there was a little bit of hesitation. Volume would slow down a little bit ahead of him speaking, and then he would speak, and it seemed like the market would just continue to rip. And they were actually pricing in a Fed pivot. And what I mean by Fed pivot is that they're going to stop raising interest rates and have to lower them in order to start the economy. Well, he comes out Friday and he says, listen, we are going to use our tools forcefully to attack inflation that is running near its highest level in more than 40 years. He also states that there is no place to stop or pause, raising interest rates. And while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. If you didn't watch his speech, go back and watch it. Like I said, it's just 8 minutes. This is the hawkish I have heard him speak probably ever, okay? And investors really took to that. Also, if you take a look at what I mean by the Fed pivot, is you can see what is being priced in as an interest rate hike, either 50 basis points or 75 basis points at the September upcoming meeting. And you could see a week ago, what was priced in for a 75 basis point hike a week ago was only 47%. And now we're at 61%. A little bit of a difference, but what's even greater is take a look at the December, okay? And that's where they were thinking about that 350 or 3.5%, 350 basis points price range. And now if you look, what is being priced in from 375 to 400 or 3.75 to 4% a week ago was just 19.4%. And now we're at 41%. Okay. So keep that in mind. This is still a very, very bearish setup. We do have a little bit of support, and I'll show you the quick daily before we get in talking about AMC, all right, and APE. But this 408 level, was a big support. You can see almost as head and shoulders trying to form right here on the daily time frame. We broke through that. Obviously it's going to be the 400, a little bit of psychological level. They might maybe test that 398, which is the 20-day moving average, and beneath that, you're looking all the way back at 391. Now, if you remember, when CPI did come in a little bit hotter, we moved all the way from the time it was announced or the day before, from 408 all the way down to 362 in a period of just a few days. So this can move very, very quickly. There still is a lot of downside. And just taking a look at what I had showed you, that listen, only 40% is priced in, to where we are between that 375 and 400, and none of it is from 400 to 425, which given the time frame, it could potentially get there. I think that would be at an aggressive rate. There still is more room to the downside, so keep that in mind. Now let's take a look at AMC and APE more specifically. So when you take a look at AMC, and I'll just zoom in a little bit for you guys. All right, it's being pulled down obviously with some of the news, and as of Friday, just natural market, pulling back. You can see the cycle is very similar, a little bit of choppiness when Jerome Powell was speaking, followed by a sell-off. Found that 9 psychological level as a little bit of support for a bounce. But one thing I do notice is APE is holding up a little bit better. Actually, Ape almost went green. I don't know where it is in my chart right here, but Ape almost went green if it didn't go green for a little bit on Friday before just getting a bit of a pullback into the close. But when you zoom out, okay, from its open, it's holding up a little bit better. And this got me thinking, okay, and unfortunately, guys, the research is going to have to be left to you. Now, during a standard IPO, and I know people are talking about this T90, and they're talking a little bit about when it comes to the dividend and the shorts and they have to cover and so forth. I'm specifically talking on offering, okay? When it comes to a standard IPO, a lot of times there's a lockup, agreement, not only with the time frame until they can do either a secondary offering, okay, and drop more shares on the market, or insiders can sell, or if it's a SPAC, like obviously SPACs were insanely popular, just a couple of years ago, okay, when the pipe can be unlocked and so forth. There's a little bit of a time frame. And it's really to make it fair for institutional investors and retail investors, not to just get dropped on a day or two after. And that time frame can range anywhere between 3 and 24 months, which with that 3 months being the most popular, as a lot of the hype will begin to settle down after the first 3 months. I did take a look at the underwriting, and while I did not comb through extensively, I didn't see anything that was specifically listed. They do have 1 billion shares that could potentially be authorized quicker, obviously, than that 5 billion, and which we all know about. But my whole point behind this is that keyword offering, okay? And so let me tell you, back in 2018, 2019, I was pretty much strictly large cap options, which is really what I have been throughout this entire year. But in 2020, we got, once that quantitative easing came in, that free money came in, a whole new wave of retail traders come in. I really started to follow the high growth as the opportunity was better, okay? And we got into these small caps, and everybody who's been inside the group for quite some time, you remember that my entire pre-market playlist, okay, pre-market picks was all small caps, and that's pretty much all I was playing. That's where the interest was. And a couple things I noticed, all right, and especially with biotech companies, and the reason why I'm going to focus on biotech companies is because a lot of these biotech companies, they're based off of future valuation. They need cash to be able to continue their testing in order to get their approval and get their product to be sold and obviously monetized. And they run heavily in the red. Okay, you take a look at their balance sheets, they're heavily in the red. And we used to see all the time, okay, and I would say this to everybody, all right, whether it was the first day, the second day, you would watch any little bit of action happening in pre-market, and then it would begin to flatline throughout the day. And it would always hold above whatever that support level was, all right? And it would never really break below, but volume would go to nothing. Okay. And I hope there are people that are watching this because that have been in the group for over a year, because it's really going to click. But volume would slow down. And everybody used to be like, what's going on? Like, how come it isn't selling off? Like, we watch other, previous, runners like this that would just go back down to nothing. Okay. Or they would pop up 20-40% and go back down to, pretty much their baseline of support, if not break support. Okay, when volume would go to nothing. Why is this holding up? And I used to say, listen, chances are they're being set up to do an offering. And what I mean by that is, after looking at enough small caps, and if you study small caps, you can completely testify this. If you haven't, like I said, do some research if you're not just going to take my word on this. But market makers are very incentivized to be able to hold this stock price up. And the reason being is because by the time an offering gets settled, okay, by the time an offering gets initiated, obviously these market makers know about it before the public knows about it, before it gets dropped onto the market. They stand to make a lot of money off the deal. There's a ton of shares, anywhere between, let's say, 10 million, 20 million, okay, to potentially 100 million, if not more, shared, depending on how big the float is. A lot of the biotechs, obviously, they have smaller floats, but anywhere, let's say, between 20 million or more shares that are going to get dropped on the market, that the market makers want to begin to sell. They get to be able to collect that bid and ask spread on it. All right. And it just brings a ton of action for them. So they stand to make a lot of money, and market makers will hold the price up. All right. Now, while we still are very early on with APE, okay, just knowing that specifically, Adam Aaron has stated, listen, we need to raise capital. Okay. It's very clear. We've talked about that. He said it numerous times. You take a look at their balance sheet, okay, at their cash burn rate and everything that's happening right now in the economy. They need to be able to raise capital. It's been designed to be able to raise capital. Okay. And they have the shares outstanding to be able to do that. Okay. Like he said, they can immediately, put, or they initially have it to be able to put up to $1 billion with the max of up to $5 billion before they have to ask for more shareholder approval. So market makers are going to be incentivized to be able to hold this price up. Now, if there is obviously that 3 month, that T plus 90, well, then you run into a little bit different of a story. Probably see a little bit of volatility. They'll probably try to keep it above that $5 level, maybe $6 level. But eventually, when that time comes, market makers are going to want to hold that price up, and they're not going to let it get down, too much, because, like I said, they're incentivized to be able to make a lot of money off the deal. So a part of this, guys, first of all, is obviously just speculation, and clearly is just my experience when it comes to offerings and small caps. But it's something worth noting, especially because we are very early on of a stage. So that's it for this video, guys. I'll see you in the next one.